It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey, it's Tyrone Jackson, the wealthy investor, and thank you for joining me for another fabulous episode of what? Trading Stocks Made Easy. Now, today's a really interesting show because I'm actually going to give you a free lesson on how to trade in the stock market. But it's not just on anything, it's on how to trade options for what we call in the Wealthy Investor Program, fast, sexy money. Now, the reason I'm doing this show on options trading is because I was surprised at how many of you expressed an interest in wanting to learn how to trade options and not lose a lot of money in the process. I want you to learn a methodology that actually works. Now, some of you know that there are fast ways to trade stocks. What we cover a lot and we talk a lot about on this show is covered call writing, which brings us guaranteed monthly or weekly income in the stock market. As part of my Fast, Sexy Money series, we have some trades that are automated trades that we use in the program on a regular and consistent basis, and they're based upon volatility. Now, if you've never heard me use the term volatility before, you might be wondering, well, what does that mean, Tyrone? Well, each and every day, most of the stocks that we trade in the Wealthy Investor Program fluctuate in price. And some stocks move very, very quickly up or down, and that fluctuation is referred to as volatility. So when I am volatility trading, I am buying a stock and quickly selling it back to the market to make a profit. Now, a lot of people think volatility trading is actually day trading, and that's not really true. So let me make the distinction here in this particular episode. Day trading means that you are at a computer all day long, buying a stock, waiting for it to move up 25 cents, selling it to the market by clicking, and then waiting for the stock to go back down, and then rise and reselling it again. So basically, I think of day trading as a job, and that is the last thing I want in my life is a job. It's the last thing I actually teach people is how to make a job out of trading because that's essentially back to trading time for dollars. We trade in the Wealthy Investor Program using automated trades. In other words, I'm going to buy a stock and then I'm going to give the software a price to sell those shares inside my account. That's an automated trade. It doesn't really have an official name for it, but in my program, we refer to it as volatility trading. So what does that mean? Imagine I'm trading my favorite stock, which is XYZ stock. It's at $66 a share. Because I've studied the actual chart of the stock, I notice that the price changes rather rapidly throughout the day. So if I get my shares for $66, I can buy, let's say, 100 shares of a particular stock at $66. And then I can go inside my automated online trading account and I can tell the software as soon as these 100 shares hit $67, sell them. So let's go through this again. If I buy 100 shares at $66 and I instruct the software inside my account to sell them when those shares hit $67, if I have 100 shares, I earn $100 on the sale of those shares back to the market. However, if I own 1,000 shares and I buy those shares at $66 and I say to the software, could you please sell these shares at $77? And the second those shares during the day, which we refer to as intraday, sell, I make $1,000. Well, the question becomes, if I really want to get good at fast, sexy money and volatility trading, how often can I buy 1,000 shares at 66 and then have the software automatically sell them at 67? Well, if I can get out of that trade once a week, I make $1,000 a week. If I can duplicate that trade twice a week with 1,000 shares, I make $2,000 a week, or $2,000, $4,000, $6,000, $8,000 a month. You see, that's fast, sexy trading with stocks. But what a lot of people don't know is that you can fast, sexy trade or volatility trade with something called an option. Now, an option is either, for our purposes, going to be something referred to as a call option, the right to buy a stock at a particular price, or a put option, the right to sell a stock at a particular price. Now, I don't much trade put options, and here's the controversy. A lot of people like purchasing call options when stocks go higher and put options when stocks go lower. I have found and developed a system that allows me to make money off of stocks that are upward trending, and therefore I really don't need put options at all, because statistically, if I am right and the stocks that I'm trading rise more often than not, I can make money off the sale of the stock. And I can also make money off the sale of the option, the call option. Now, try to follow me here, because this is Trading Stocks Made Easy. But when I start to teach derivatives trading, both calls and puts, that's where the complication starts. But I've helped most of my students do very well because, well, I teach them the easy method. So imagine owning a stock that is rising, or as we say in the stock market, upward trending. And then you also own a call option, and a call option is a derivative. So when the stock goes higher, so does the value of the call option. Or as I like to say, when there's a small movement in the stock, there's a magnified movement in the option. Why would I want to own a call option on a stock? Well, a call option increases in value almost twice as quickly as the stock price does. You see, if I'm going to build up the skills to be a fast, sexy volatility trader, and I don't want to be greedy, but I want to apply a technique, is there a technique that can be applied to the rise of the stock and the exponential rise in the call option? The answer is yes. The reason we like to volatility trade is because we can make a lot of money quickly when the market is rising, also known as a bull market. You see, on Wall Street, bulls represent aggression and bears represent retreat. So you may have hunted around online and found that there are all these systems that you can learn about how to trade call options and make a lot of money. But what I have found is most people don't do well trading call options because at some point call options expire. They have an expiration date. Instead, we buy call options in the wealthy investor approach to the market that expire a year or more from now. And those call options are referred to as LEAPS call options. And LEAPS stands for Long-Term Equity Anticipation Securities. And we have a year to be right about the direction of a stock. So follow me here so perhaps we can put all the pieces of this puzzle together, and then I'm going to tell you exactly where to go to get your first free lessons on how to trade LEAPS call options. Okay? So imagine a stock increasing over time. We refer to that stock as upward trending. And then we have this derivative thing, in this case, a call option, so that when the stock rises, the value of this call option rises quickly or exponentially. Well, if you learn how to pick good companies that have a tendency to rise because the fundamentals are strong, and you own call options on the stock, you can trade both the stock and the option and earn a lot of money. Now, I teach a lot of my students to do this, and a lot of them come on this podcast and they talk about their experience. Trading call options and trading shares requires discipline, because if not, you can get very, very greedy. Or first, at least you get a little too aggressive, and then you get greedy, and that's not a good thing. So here's what I thought I'd do. From episode 44 of the Trading Stocks Made Easy, I want to play you an excerpt from when Brian DeMars, Zane Mark, Andre Blake, and Melissa Hebink were on the show and talked about the amount of money that they were making and what they've learned from being equity traders, shares, and also trading options. Take a listen. Great trade that you can remember, Zane.
Actually, it was a Netflix trade 100 years ago when it wasn't a trade that we did in the class. And I put the trade on and I wrote a put.
Okay.
And the earnings came out, and everyone was expecting earnings to be bad. They had just decided we're going to go into live streaming content. So what do you guys know about creating original content? Nothing. You don't know the earnings are going to be horrible. The next day, the earnings come out, and they're wonderful, and the stock still dropped.
Yes.
And that was my idiot move that I had no brain. There was nothing I did that made sense, but I think percentage-wise, the biggest trade I've ever had in my life.
Right. And how did you feel?
It was a lovely thing, but it was still a little head scratching because I'm like,
what exactly did I just do?
Kinda. And that was several years ago, but that was that was a big one. And then it was last month, which was, I'm still kind of shaking, like.
In a good way.
Very good way.
Yes, in a very good way. Melissa, best trade as an option?
It was Apple earnings in April.
Right.
I bought a put for the first time in my life, and I know we're not supposed to buy puts, but I bought one. It was just ridiculous, the profit I made, though, on it. It was like, I think I made like $3,000 in 2 days.
Yeah, isn't it great? When it goes right, it's like the greatest thing.
Yeah, like I put $1,600 in, it went to $5,000, so then I made like $3,000 on the trade.
Yeah.
I was like, oh, wow.
You guys all, it's interesting because you're all sort of kind of using fundamentals at the same time. Like I'm hearing some earnings trades, right, which are really great because volatility is there. So you're not, even with that, you're not just blindly trading options. You're using some strategy around some event. Andre, best options trade?
Similar. I believe it was a Netflix trade, and it was around earnings. And I set up a straddle.
And explain what that is really quickly.
When you buy a call and a put.
Yes.
If I remember correctly, earnings came out, the stock shot up. I got out on the call side with what had to be, I think I doubled my money. And then I think a day or two later, the stock dropped.
Yes.
And I didn't sell out of my put and was able to capture money on the downside as well.
Yes.
That I was like, okay, lightning struck. Thank you, Jesus. I had my Jesus moment, and that was it. So,
Brian, best options trade?
It was about a year ago on Netflix, Leaps, when we were doing the buying the $1,500 leap, whatever the delta was that you had taught us in class.
Right.
I made $4,000 in 1 month, and that's why I became aggressive after that.
This is just the beginning. Now, listen to the lessons that they've learned when they lost money or they got greedy trading both equity shares and call options. Greed in options trading. Who wants to speak to greed?
I'll take that one.
Okay, go ahead.
And I have to be honest, I don't think I've been that greedy, but what I do notice is a lot of the new people in the class, and you just see them going, wow, I can make so much money doing this. If I just add another zero here, or maybe two, bang. And I'm like, no. And I see them in the class, and I kid you not, I've gone over to them, one or two of them, two in particular that you guys know. I said, hey, check this out. You can make a lot of money here. But until you really understand what you're doing, go slow. Don't go full in. It's a little dangerous, especially because you don't know what's going on. And you did pay this guy to take his class and kind of do what he says. It's not a bad idea. And the people that don't usually come in with some kind of unrealistic dream. You can have your dreams, but if you have a $2,000 account, you're not going to make $1 million at the end of the year. It's not going to happen. And trying to jumpstart it that fast, slow and steady is the way to go.
Well, sometimes when I'm teaching options, I tell people, I'm giving you the keys to a Ferrari, right? Could you do me a favor and go 40 miles an hour? Right. Now, who wants the keys to a Ferrari and drive it 40 miles an hour? You drive a Hyundai 40 miles an hour. A Ferrari is built for speed. And one of the things that I've realized is you have to let people, or I have to let people take that journey. Even though I say only trade with one contract as options move really quickly, people think greed is a very interesting experience, and it's easy to be seduced. As one student told me, she said, Tyrone, it didn't feel like I was being greedy at the time. It just felt like I was just doing a trade, but they were in too deep. How did you learn the lessons? Let's go around on this one. We'll start with Andre. How did you learn that lesson not to load up on options and still trade shares?
Because I lost my money.
Okay, how much did you lose to learn that lesson?
Oh, wow.
How much did it cost you?
How much did it really?
Yeah, let's go with real numbers so that people
Real
really
numbers?
understand.
It probably cost me about $5,000.
Okay, and
everybody's like, you got off light.
Only $5,000. What did you do wrong?
I believe it's important to make mistakes early, because when your account is smaller and you make a mistake, you feel it.
Yeah.
And then there's something that happens.
Yes.
You go, okay, I'm not going to do that again.
Right.
Or when you do choose to get back into leaps, you're a little bit more conservative, because in so much as you understand the power, you can also understand the pain.
Okay.
And when you're clear about that, and you step into the trade, I don't know, maybe with a little bit of trepidation, can go a long way. So just again, don't be greedy,
right.
like everyone has said. If you just tread lightly, it'll come to you, and just kind of let it be.
Melissa, have you ever lost money trading options?
Oh yes.
How much?
Probably about 5,000 too.
Look at these guys. They're like, these are lightweights over here.
Oh, probably more. I don't know. I have to calculate.
More. I
have to calculate it.
Yes. But let's go with the $5,000 loss.
Okay. Ouch.
Did that hurt?
Oh, yeah. My account's not that big.
Do you remember what you did to cause that $5,000 loss?
It was very early on when I was learning options. When I made that first profit, I was like, ooh, this is good.
Yes, it is.
And then I was like, okay, let me get another one. And then you kind of keep going with it, and you think the stock's going to just go off into affinity. You keep going. And the next thing you know, when it pulls back, it's like, oh, shoot, I just lost all of what I just made. It's not any different than going to Vegas.
Right.
Like, that's where it's like
I
you really
think
have to
shoot.
Shoot herself.
I'm gonna tell you this. I have never been a person who's afraid to lose money. And I try to identify with people who are, because I feel a little bit like, first of all, as long as, and you guys know a 10-month formula that I always teach. If you lose money on the options, you should be able, as a cover call writer, to make that up within 10 months. So therefore, you would never invest more than an option than you're capable of earning on a covered call, right? So I've never been one of those people that sat around worried about losing money, because I just always felt like I'll get it back from the market. Zane, have you ever lost money on an option?
Yeah.
How much?
I have, I think, 4 accounts that I'm trading. So this one particular trade I put on across all 4 accounts, that one time, I think it might have been about $60,000. And I think the main problem was I knew what to do if everything went well. I didn't know what to do if it didn't go well.
Okay.
So I didn't have the shares to help me out.
Okay.
To make that money back. And, Melissa likes to do trapeze work on her off time. They don't just throw you up on the bar and say, good luck. They teach you how to fall. They teach you make sure there's a net. There's a whole bunch of other background stuff. So you just don't go full in like I did and not know, or at least look down to see that there's a net, or know that what do I do when the guy has his arms out and I miss him? What do I do? And I didn't have that in place.
Okay.
And that was my mistake. I was like, all right, trade one option, trade two. When you go into a third of your account at the time and just, okay, that was a mistake. And so I don't do that anymore.
Okay.
And also, I don't think there were leaps that I were trading either. They were a little shorter. They were like 3 or 4 months, but they weren't 12.
Very interesting, right? See, my task is to introduce you to being a successful call option trader so you don't have to make large mistakes or lose a lot of money. If you just follow the Wealthy Investor System, you'll find that you'll be more successful more often than not. So here's what I wanted to do, and I wanted to make this a very short episode because I want to encourage you to learn more about call options and leaps in particular, because they are basically Wall Street's hidden secrets. So I'm going to give you a very specific URL to go to on the Wealthy Investor website so you can get your first 2 lessons totally for free. They're in video form. I want you to watch these lessons as many times as possible, and I want you to gain this knowledge. So if you find that you're attracted to making fast, sexy profits, volatility trading, utilizing a system, you can get introduced to that methodology. So here's where you're going to go. You're going to go to www.thewealthyinvestor.net/free option lesson. That's thewealthyinvestor.net/free option lesson. And I want you to log in and watch the first 2 video lessons and begin to realize how much power and how much profit there really is in trading options.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.